Cool. So it's time to go. Hey, everybody. Welcome to the Closing Beat. Happy Valentine's Day. Huh? Oh, I didn't wear red or pink or purple? No. You don't wear red?
You could wear red on Valentine's Day, yeah. It's not like St. Patrick's Day, though. You don't get kissed if you're not wearing red.
Okay. So when's St. Patrick's Day?
March.
Okay. Green it is. So Cody's doling out the kisses, apparently. Welcome to the Closing Beat. We're financial advisors here at Jazz Wealth. Just your average financial advisor with above average service. We are fully transparent. What you see is what you get on the website there. And no games. We don't play around, no nonsense, nothing, shady or anything like that. And to prove it, I'll tell you that today we called every single client one by one, and we wished them a happy Valentine's Day. Told them we love you, we love you being around here. Wish you the best. Wish your family the best. And that is officially a lie, right? Because if I were to try to lie like that, the comments would be going crazy. You guys would all be like, no, it's not true, right? So obviously, no nonsense or BS around here, even though I have admittedly said I am 18% BS, but that's a good thing, right? Speaking of BS, some of you are upset. I saw it. Some of the feedback that I got, I don't get it. Inflation is higher, Dustin. Why hasn't the market fallen? Because the Fed's going to have to raise rates. Remember, we talked about this yesterday. The Fed had already projected it, and the fact that they had projected it means that analysts raised their number. We expected a 0.5% increase in inflation, month-over-month inflation, which still means that inflation's going lower. Don't fall for that little trick on the old financial media there. So you had CPI, which is what's referred to as inflation, Consumer Price Index. That's how we tell whether the cost of things for us has gone up or down. There's also Producer Price Index, which is the price that the manufacturers pay for the stuff that they eventually sell to us, right? So we watch that as well. So the CPI, or inflation, up 0.5%. Core CPI, which has been getting a lot more attention over the last couple of years, up 0.4%, and both of those are well within expectations. They were almost perfectly spot on there. And so what you had is a reaction to inflation today that was the calmest reaction to inflation since the middle of 2021. We have been used to, conditioned to, and been a part of inflation causing the market to go wham, big down moves, wham, big up moves. Oh my God, the Fed's going to do this or that. What happens when the Fed says, we think this will happen and we're okay with that? And then it actually happens, right? You get a calm response to it. Now, inflation year over year, that's the number that we all look at. Us average people, right? We look and go, inflation is now 6.41%. Is that lower than what it reported as last month? And remember, we're reporting the change year over year. So it's 6.41% compared to this time last year. That's all we're reporting there. And so we have last month, right? We have inflation at 6.45%, right? Yeah, 6.45% compared to that time last year. So we're trending lower, stubbornly lower, but we were at 7.11, 6.45, 6.41. Essentially, the Fed is winning the game here. Now, I'll tell you that core CPI real quick, just because I know I'm sort of rambling. It's going to be one of those days. Core CPI was and is lately been the focus. But we excuse me, we had a little fun with this, where if it weren't for rent prices in that metric, we would actually have lower inflation than before the pandemic. And I'll show you here because we broke it out for you. So we're going to go like this. Ta-da! So if we take, here's the, so the dark blue line, right? I don't know if you could tell if it's blue, but the darker line is the core CPI number with everything included, okay? So maybe leveling off, we'll see. If you take out rent, this lighter color line is in fact where core CPI stands. Rent accounts for 32% of core CPI, so it's a big proponent of, or big weighting in there. Look at how we're already back down to below 2%. In other words, we can look at the core inflation number and say, it's rent. Rent prices, unfortunately, are still really high there. That kind of sucks. But if you back that out, all of a sudden you go, oh, okay, everything else looks pretty good. The Fed's actually winning this battle here. And remember, there's one other thing that the Fed wanted. They wanted to see your income growth, not your income, but they wanted to see the growth of your income level off, preferably pull back, right? What happened? Is it buffering over there too? No? Okay, so it's just me. So we'll leave that. So the Fed wanted to see your income growth slow down. So I'm going to pop back over here. Here we go. Here's the 1-year forward income growth expectation. Again, don't fall for this stuff on financial media where they show your income falling. No, your income growth has slowed. That's what the Fed wanted. They're winning. And so I'm winning our little bet here with Mr. Eric in the office. We're getting the picture of that soft landing at the moment. And so that's just a long-winded way to kind of take you through that. Let's bounce over to the markets here for the day. Kind of a non-event. You've already probably figured that out. We talked about that here a second ago. And why? Real simple. The big 8, aside from NVIDIA, the big 8 didn't want to play today. That's what's lifting the market. If we know that's what's lifting the market, and it doesn't, for example, Microsoft doesn't do anything on a day, slight gain, not a big deal, then the market's not going higher. If we take a look at something like Apple, not a horrible day, but it didn't go up, down, it was basically flat, small down day, right? So the market's not going higher. You could go and look at something off the beaten path here, Zoetis, right? That's a great day for them. Good job. One of the best performers in the S&P here today in the drug space. Hey, not bad. Moderna. Hey, good job, Moderna, right? Great day. Oh, you don't like that? You want to go travel? Let's go. Why isn't it not coming up? Booking Holdings. Hey, good job, right? Great. But that's not lifting the market. So they can have the best days that they want. That's not going to push this market higher. You have the big names. Those guys didn't want to play. And so therefore today you have nothing to shout home about because the stock market, sorry about that, the stock market actually didn't do anything. And it's sad how that works, isn't it? That unfortunately it's those names at the moment that are driving us higher. If we go on over to look at the NASDAQ, well, that's going to do a little bit better today because the semiconductors, those that do not move the S&P as much because they're not as heavy weighted, that move the NASDAQ. NVIDIA, AMD, Micron, ON Semiconductors, Qualcomm, even Broadcom for a few fractions of a percentage point there. Not bad. Waking up from this pullback here, nice. I have no complaints about that. It's all good. You got the Dow down a little bit on the day and, just nothing there to lift it. I would point out the big names. Where'd the UNH go? Let's see why it's not on my chart today. You look at something like UNH, nothing there to work with. That's one of the, if not currently, the highest price stock in the Dow. Remember the Dow, the higher the price, the more weight that you have. Russell 2000 also taking a little bit of a break here as well. We're okay with that. It's calm, it's quiet, non-event type day. If you were to look around the Russell 2000 today, the small cap value and basic index positions, they didn't do anything. They weren't bad. They just didn't really do anything. The only action came from small cap growth, and unfortunately, that's not enough to lift the markets there. Now, if we go over to earnings season real quick, not counting after hours, we have 844 names that have reported earnings so far. Now, I can't go through all of them. Obviously, we'd be here all day. There'd be very limited watch time. You guys would just probably beat me to death. But we can do kind of a summary and then pick on areas, right? We don't have to look, and this sometimes happens where you think, oh my gosh, there's so many positions to choose from. I'll just go with things that I know, or I'll go with things that are hot, right? You can summarize everything and quickly find out where you might want to be. I'd like to point out something real quick, that the percentage of stocks that have reported earnings that in their conference call, and this is easily trackable because they have transcripts of their conference call, and so you just run a script to say how often did they say something. In their conference call, the percentage of companies that are fearful of a recession or wording their conference call around the idea of a recession is rapidly deteriorating. And that sucks for a few names because they were pretty sold on there being a recession. Here is a backlog looking at this. So if we go just back to 2022, we can understand the markets are falling all year. Over 40% of companies that reported earnings said recession in their earnings report or conference call. We're down to 12% now. So what is that? Bullish, bearish? What's going on there? That's a good thing, right? It means companies are not fearful so much as they were, fearful of a recession. Therefore, what will they do? They're likely to spend some money to grow. They're likely to feel a little bit looser with their extra cash flow and give that back to you. They may buy back some shares, pay a higher dividend. They may choose to buy another company, which drives value, growth, and everything else. So the fact that we're seeing less companies believe there's a recession is great. Now, of the 12%, who are they? And what's their problem, right? So here's a small list, and I took this directly from the transcript. So we were looking for companies that said recession, and then we just said, okay, pick names that everybody knows, and let's see what they actually said. So hopefully you can read it. UPS. They said in the U.S., we expect a mild recession in the first half of the year with a moderate recovery in the second half of the year. So they're predicting a really short recession, actually. They think that their daily volume will be down slightly. Now you know why their stock fell from earnings there. Continued volume declines there, and there's a issue. You know who their largest customer is? Anybody want to guess? I'll let you guess. Can anybody guess? I bet you could guess. Pretty simple. Nonetheless, recession. You see where they said it there. JP Morgan, they said that we're going to have a mild recession. And this was actually the CEO there. Unemployment peaking at something like 5%, basically. Tesla, more plainly worded. Got to love that. As I said on the last call, there's going to be bumps along the way, and we'll probably have a pretty difficult recession this year. Probably. I hope not, but probably. That's how I would talk right there if I were given a conference call. McDonald's. Now, these are names that I'll come to why I'm pointing this out in a second. We've got macroeconomic concessions, blah, 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 mild to moderate recession in the U.S. this year. Bank of America, same thing. Citigroup, same thing. Base case, you see a lot of that in the wording here. Mild recession, blah, blah, blah. Right? So what's the big deal? If you're investing in McDonald's and management believes there's going to be a recession, and I might add worldwide for them because and same with UPS, they're not just talking about here in the United States. How do you think they're going to handle their money? Are they going to be willing to let go of their money as much as other companies? No, right? They believe there's a recession. They want to hold. They want to save like you would. If you believed you were going to lose your job, you would hold on to more cash. You maybe wouldn't go out to dinner as much, buy that extra car or whatever. So for these companies and all of them in the 12% that did that, now you have to wonder how they're going to use their cash. Does that mean you want to be an investor in a company like that while they're playing defense? Maybe, if you really believe there's going to be a recession as well. But if you kind of believe like, all right, we're working our way out of this. This is okay. You know, it's not so bad. Well, then that wouldn't be where you want to look because they're still playing defense when everybody else, at least as of the start of the year, is playing offense. So you get my point there? That whole 5-minute thing is something that no one is going to put together for you, right? Not because they're mean or anything, just they won't dig that deep, especially a financial advisor. So yay, promotion for Jazz Wealth. Also, our Wine of Wealth classes have been great, actually. We did a class last week that has driven more email communications from clients to me than we've probably had since the start of COVID. I love it. That's why I do these classes. They're private, available for clients every Thursday, and they're archived as well. We may talk this Thursday, about the covered call game. Getting a lot of questions on that. A lot of people saying, okay, I'd like to sell some covered calls. I want to dip my toe in the water and experience that. There's a lot I think you probably should know, and so we may cover that this week. And then 2 weeks ago, we covered return on capital and the intricate details of that. So if you like that geeky stuff, come on down. We are the advisor. See, it says at the bottom, financial advisors for all size investors. That includes you. Okay, I'd like to point out a few earnings here and some stocks in the news. Vornado, this was a nice beat for them. Come to find out, so if you don't know who Vornado Real Estate is, they really kind of focus in New York. That's kind of their wheelhouse. They don't go outside of that a whole lot. They've been to Boston. I think they had one LA property at one point. But during that fourth quarter of last year, which is their earnings report here, they actually said, this is ridiculous. These properties are worth so much. Let's just sell one of them while everybody wants to pay a lot. And so because of that, earnings beat by 7% there. Operating income up 6.3% year over year there because they said, let's sell off some properties. So if you were in the same camp there with your house or condo or whatever, good job. Speaking of good job, you guys apparently are with Avis and Budget renting cars out there. Earnings beat by over 60%. You guys are renting some cars there, man. That was higher than expected. They said, and these are their words, I took it right from the transcript there, their commercial segment activity. I said, well, this is well above 2019 levels, right, before the pandemic. And so is the leisure segment. It continued to show really strong performance, especially over the holiday period there. Both of those trends have continued into the first quarter. They told you right there, that's why the stock is up so much. They told you what happened is still happening right now before we even report those earnings. So way to go there. I don't know where you guys are going, but oops, you're not coming down here to visit us, but you're doing a little bit of vacationing there. Huh? A little more car rentals. Either that or you can't afford to buy a new car. And so you're like, I'll just rent a car because my old car broke, right? That's not the case, but just saying. Cadence Design. Now, these guys, by the way, so we don't talk about them often. They're in the semiconductor space. They design the software for making these complex chips that I'll know nothing about, especially in the wireless space there. Anyways, earnings for them come in 4% higher than expected. Revenue 2% higher. This is interesting because go 2 layers deep now. Don't just go, great job on earnings. Maybe that's a stock that I want to buy. Yeah. Okay. No, it's interesting because their software is in demand. If their software is in demand, what does that mean that the semiconductor companies are doing right now? Are they making the devil out of some chips there, or are they not? They are. Now, we can tell from looking at one of the subsets in the industry there. They're also going to buy back a bunch of shares. What did they say? They're taking about 50% of the rest of the year's free cash flow to buy back shares. And so you know the game now, right? If a stock mentions they're buying back shares, they get a boost, period. That's how it works, or has been working. All right, last couple of them here. I'll point out Ford. So they're going to cut about 3,800 more jobs there. And if you have on order or are expecting to get delivery of an F-150 electric model, that has been halted. You will not be getting those. Because of some battery issues. I didn't read any deeper into it. Apologize. I just read it and I was like, well, all right. That sucks. Coca-Cola, better than expected earnings there. Raised their guidance going forward. I think the issue, and always the issue with them, is organic sales. I did not take a look at this, but I'll bet you if you look at organic sales, they were just a slight miss there because that's what tends to hit them. Think about it. That's all Coca-Cola has left, right? When you get to be so saturated in the market, those organic sales are where it's at. And so that's what everybody wants to look at, apparently what everybody is. Hey, Jazz After Dark tonight, we'll be talking about how to get more out of Social Security, right?
Yes.
Right, yes. How to get more out of Social Security, like, you know, not just playing the silly game of work longer, you know what I mean? We're going to talk about how you get more out of it. It's not very complex, but we'll go through 4 different ways of how you can get more out of Social Security when you are considering taking that. Yesterday we did how to save on summer vacation. Cool comments, right? Good feedback on that one. Appreciate that. And we'll keep plowing ahead with those. I'll take your questions here now if this thing will ever load, and we'll dive into it. Yeah. I like it. All right, questions. What do we got here? Amazon, you're looking at? I saw Nikki Haley throw her hat into the ring. I don't know much about her, but didn't she run for president before? Maybe. I think she was it. There was a lot of them before. I don't know. You see how it's creeping up on us, by the way? So this will bleed into the markets. This is not politics show. I don't pretend to know more about this stuff until they start talking about finances. That's where I focus. But it's going to creep up. You know, we're going to get a little bit more of this. Who's going to be in the race and who starts bashing the other person. And, you know, just, I'll say like I always do, just look for people that want to get things done. I think we're all there, right? I want to get some stuff done. You don't like the Ford EVs? Hey, I kind of like the Mustang Mach-E. Yeah, there's like 6 of them now in my neighborhood. I don't know if they live there or whatever, but not bad. I think I almost prefer that over a Tesla visually from the outside. But I'm not in the market for a car, so. Hey, Jay, when can we expect a post on 3 solar companies, in your opinion, that would benefit from the Inflation Reduction Act? It's there. It's in the dojo, actually, and I don't have that up in front of me, but it's one of the more, it's got to be within the last 5. Oh, January 31st. Look at that. January 31st. So the videos in there go by chronological order. Andrew Jackson. Well, okay, that's a cool name. That's a cool name. I love the show. Thank you. I've been looking at Tyson, near 52-week lows, earnings. Yep. What happened to the drunk guy? Did we get past that? Is that over with? I kind of wanted to follow up on that. Near 52-week lows, earnings, low PE, missing anything. This would be considered a value stock. Yep. Margins are the issue for them right now. Other than that, you're setting yourself up for someone that is clearly going to navigate through this. This is not their first rodeo, but margins are so tight right now, it's not leaving a lot of room for growth for them. And that's the issue. But now hopefully you answered your question there. Yeah. Does someone have the Mach-E? Is that what you're saying? You've been reinvesting your dividends for Exxon. Should you stop or continue reinvestment? Why would you stop? Nothing's changed there. Something changed in your life? You want to cash in or something? Are you saying maybe because it's, trudging along, doing great, you build up a cash value there? I've got that question a few times. I can't say I wouldn't do that. If I had a stock and it was paying, obviously, decades and decades worth of dividends and showed no signs of stopping that, I would know I would be early, but I would probably do the same and just say, all right, let me scale back and reinvest it when it pulls back. So I think that's the question you're asking there. Osraf says, when you say other advisors don't manage their portfolios and don't dig deep, then what they actually advise? I'm asking seriously, not rhetorically. Well, most advisors, so there's something called third-party money manager or something called a TAMP. And I don't know how they decide. That's the most horrible acronym ever. But a third-party money manager, basically you hire them and you say, manage my clients' portfolios, and then the advisor sort of white labels it and pretends that they did it. Independent advisors like us, we don't do that. And then a TAMP is it's called Turnkey Asset Management Program. And that's becoming more popular in our space, where everything's included and the advisor just kind of goes out and sells or does whatever they do. And so they don't actually make decisions based on your investments. They just follow models and say, well, you should be 80-20 or 60-40 or whatever. And it's like, why? If you have the ability these days to be ultra specific for one person and customize something, my thought is I'm going to do that until I can't. You know what I mean? I can't do it anymore. Plus, that's my background and everything. So most advisors don't come from money management, portfolio management, mutual fund management. They usually come from just banking somewhere outside the industry. So, yeah, I hope that answers. Brandon says, I don't get much time to talk to one of your advisors. How does one like me get started with Jazz? Meaning you don't have much time to talk with us. You don't have to spend forever with us. You could schedule a call right on the website and then just say, although we may chat or have a window of 15, 20, 30 minutes or whatever, you could just put on there, I just have 5 questions and I'll probably be 5 minutes or whatever. Yeah, you don't have to spend a day talking to us if you don't want to. But you can also start right on the website. And what you would do is just start by opening your account, get everything up and running. We'll pick on you for everything to get you going as far as invested, initial planning and things like that. And you don't have to necessarily do it the second we get to you. So we could say, we're going to start an initial plan, give us some data, let's see what you can do. It's okay if you don't answer right back, we're still going to be here. So it's an idea. Which is a good strategy for selling off losses with a Roth IRA, since you can't write them off the laws? Are you just stuck? Meaning all right, I got a loss on something. What's a strategy to sell? So if you invest in something in your Roth, remember when you buy a stock, and we probably are going to do a class on this because this keeps coming up. When you buy something, you have to have a goal in mind and a loss in mind, right? We don't just buy positions and then go, we'll see what happens, right? So a loss on a position could be because you said, I'm willing to risk a 10% move in the stock. I think I'm correct and it shouldn't drop any more than 10%. And if I'm correct, I'll hold the stock. But if it falls 11, I'm going to admit defeat and walk away. I have a feeling that's gotten lost in the shuffle there. But you're right. There's no tax advantage. So you could just, on a whim, you could just sell something and say, I'll take a loss because I like what's going on over here. Yeah, there's nothing that would stop you from doing that. Yeah. Miles Davis, a great way to get started with jazz too. I would throw a little funk jazz in there too. You know what I mean? Just let's do that. But yeah, you're right. Good call. Maybe a little Oscar Peterson as well. What is the difference between dividends and staking reward? I don't know what that is. You like your American funds from Edward Jones, or would I look for a personal relationship brokerage company? Well, Americans, look closely, Kirk. American funds is easily, and this is not my opinion, they are the most expensive out of everybody. They've chosen to do that. They're proud of it. It's not like they're trying to hide fees or anything. But they've chosen to be the premium funds out there. So you want to look at your total net returns. I personally like when somebody comes and joins us and then they show me an American funds account because I can instantly go, I'm going to save you 5.75% a year. Bam, just like that. So it makes it a little more fun for me. The late Herbie Hancock. Yeah, not late. Sorry, what was I saying? I was thinking of, it just hit me. I thought Herbie Hancock was the one that just passed there, and that was not the case. Pictures, face, can't say his name. Yeah. Staking rewards as ordinary income or maybe subject to FICA. I've never heard of somebody call it staking rewards. You got me. If that's something, then I couldn't tell you. Staking. I thought maybe you accidentally typed in an S. Nope. Anyways, I'll wrap it up there. We'll see you later on Jazz After Dark, all right? You're going to be there. I know you're going to be there. I'll be there too. Yeah, enjoy. Thank you.